Hello, this is Rich Canlione coming to you from CME Group Trading Floor. Today's segment will be called Headline Numbers or Headlines. Obviously, it's the headlines that are particularly driving the market more so than the numbers. JP Morgan obviously now up to perhaps a negative $9 billion. The Obama healthcare package is preserved. The market is still digesting that. You sum it on the table, shows some promise perhaps. And the bigger deal is, I believe, that what you have out there in terms of the LIBOR fix allegations suggests criminal investigations into Citigroup, HSBC, RBC, Barcap, and the like. What kind of toll will that take on those particular stocks is yet to be determined. However, all the headline numbers at first blush are relatively good. Our GDP came out in line, jobless claims relatively in line, personal consumption relatively in line. The only thing that's a glitch on that is obviously the German unemployment numbers this morning, a little above average on that. We're still waiting on the Kansas City Fed. That'll come out approximately 10 o'clock. That's supposed to show some promise. We're stuck in a little bit of a range, if you will. If you take a look at what's been driving the market, aside from the perception of perhaps relative cheapness going into the quarter end markup, because don't forget you have portfolio managers that are benchmarked to the quarter end because that's a half-year mark for them as well. 30-year yield stuck stubbornly between 266 and 268. I think the high side of that has been 272 in terms of futures price. You're looking at approximately just inside of the 147 handle. I believe that low tick was 146.28 on the 12th or 13th of June. 10-year has been stuck in that little range of 158 to 160 yield. Euro-dollar, dollar-euro exchange rate, 127.45 has been the high. That was basically at the top side of June, the beginning of June, and that is in fact their 50-day moving average. Let's look at the moving averages in the S&Ps. 200-day moving average, 1298. This is in the cash. The 50-day moving average, 1340. We're stuck in that range as well. Interestingly enough, the pattern recognition shape has inverted. We had an inverted head and shoulders at one point that took us to that high that we saw just at the 1340 level in the cash. And interestingly enough, we kind of double top there, and now we're trading down and seeing a little bit of back and fill. It appears by all appearances that we should be looking at perhaps retesting 1306, 1305 level. That perhaps might very well be what you see at the last second of the quarter end, because don't forget you have a rebalance there as well, and I think some of those rebalances might actually be a wee bit on the sell side. Rich Canlione from CME Group Trading Floor signing off. Thank you.